Renovation loans have been around for several years now. However, there is a change to one of our renovation loans that helps solve a very cool problem that clients are having. My name's Miles Pitcher. I'm the owner of Superior Lending. Been in the business for 21 years. So the issue that we run into oftentimes is, number one, affordability. Clients right now, especially a first-time home buyer, with the rise in interest rates and the rise in home prices, are having troubles getting the homes that they want that fit their needs. And so this is a cool product with the change in the renovation loan that we pair to help solve this affordability problem. Is just one of the ways that a renovation loan can be used. So what is a renovation loan? It is a 30-year mortgage. It can be a 15-year also, but it's a long-term mortgage that has a construction piece built into it. The beauty of it is one of the few loan products out there that considers what the future value of the home will be once the repairs, the remodel, the addition is all built. So we look at the current value of the home, and then with plans, drawings, bids, it is also appraised at what it will be worth in the future. And we use that in a bunch of formulas. Very, very cool. Renovation loans are offered by FHA, the 203K loan, Fannie Mae Home Style, Freddie Mac Choice Renovation Loan, and then the two that very few people know about is a VA renovation loan and a USDA renovation loan. So there are many options out there. The renovation loan isn't for everyone, right? If you have equity in your home and you want to refinance and draw out some equity to do repairs, you can totally do that. You could look at getting a HELOC. But the renovation loan is specifically, and it's very, very good for a client that has low down payment and they have the opportunity to be able to do some kind of repairs to the home that will increase that value, and we can take advantage of that value up front. The other thing that we're seeing is with this affordability issue is we are seeing a lot of cities allowing for accessory unit apartments to be built. And what's an accessory unit apartment? That's like a mother-in-law apartment. It may be attached or detached to the property. It needs to have a separate entrance. It needs to have a kitchen. It needs to have a bathroom. It needs to be a separate apartment is what it needs to be. The beauty of this new change to our home renovation product is that we can now help our clients be able to build or take a property and add and make that mother-in-law apartment, accessory unit apartment, the casita. There's a lot of different names for it. And we can now count the rents, 75% off the rents off of that accessory unit, to helping our clients qualify. That's going to allow them to be able to buy more home and offset that mortgage payment to make it much more comfortable and affordable for them. A few things just to keep in mind on these renovation loans is if you're going to do the accessory unit, it needs to be allowed by the city. You need to be able to document that that is an allowable thing that zoning allows for. You also have to do the work through a licensed and insured general contractor. Pieces may be able to be done by the homeowner with some of their sweat equity, but we'll dive into that on another video. Keep in mind that on a renovation loan, it's a normal loan process with a few extra pieces added in. Number one, there are more forms to fill out, and we have to do those directly with the contractor. The contractor's bid also has to be in much more detail, and we work with the contractor on doing that. If your contractor has experience doing renovation loans, they'll understand, and they're great to work with. The last part that makes it and sets it apart different from another loan process is the contractor has to be approved by the lender. They have to almost submit a resume and an application showing they're licensed, insured, and they have experience in doing this. This is a great way, a great concept to be able to look at buying a property, adding an accessory unit, and increasing value and collecting rents on it. I will mention that typically on an accessory unit that you have to own or occupy one of the units, and otherwise the city typically won't let you do that. If you're not owner or occupying, then you're really trying to create a duplex. Let's take a minute and check out what's happening with our interest rates. Last week, the Federal Reserve Chairman Jerome Powell spoke in Jackson Hole. He didn't speak very long, but he did reiterate the commitment to fight inflation. And then he made some comments about that this is definitely going to bring some economic pain to the American people. And this sent the stock market in a tumble. We have tomorrow, on September 2nd, we have a jobs report coming out. This is a big report because we are really against a support level. And if we break, unfortunately, through that, we have some room to have worse rates happening to us. Now, if the jobs report is bad, if it has bad news in it, like showing unemployment's getting higher, that's going to be something that's good for the bond market, and that will turn and help make rates better. But as you can see in our chart here, and I'll remind you that this is an inverse chart, as the chart moves down, rates are getting worse. So we have broken down through several support levels and continue to have a trend of rates rising. And hopefully this jobs report will turn that trend around and we may get some better rates. But tomorrow's a big day. We'll be watching to see what happens with the jobs report. My name's Miles Pitcher. I'm the owner of Superior Lending, and I'm happy to help you with any questions, mortgage scenarios that you may have. Have a great week.